Good morning, Green Room. How we all doing? Good morning. Good morning. So it looks like we had a little bit of a jiggle yesterday. I think the gap up was a bit too much off of the low after the bottoming tail bar there on the S&Ps. It looks a little different in the Qs, but a gap and go after a vertical decline such as that would have been impressive. So yesterday we were expecting that the broader markets, as we look at the S&P here, would have quite a bit of difficulty to get through this area, which was about 50% from the high to the low. As we just kind of spitball it there, so to speak, as a general area to have an objective way of just saying, hey, you know what? This is pretty bearish. It's going to stay bearish. It's going to stay in that lower half and ideally in the lower third. If it can get beyond that, well, it's something to reconsider if it can actually do it. The depth of the retracement would have to deserve some respect. And then we'd see if it would get up to the top of the range and then be like, okay, let's consider, should we short this again? Does it going to go down to the bottom of the range? Because the fact is we really don't know how long a range can go on, but just generally, I think by the third time you get into the fourth time, this thing's going to crack one way or the other. So now the markets are up here this morning. Not surprising to me anyway. The gap up was impressive. It's just the first day off of the low. When you come down to make a turn, the ideal scenario is an extra day or two before trying to launch it higher. It doesn't always work that way. Sometimes you get the V and it takes off. But the more sustainable types of moves, good morning, are the type that spend 1 or 2 days after the turn day. So we'll see what today brings. But as you can see on the hourly chart, the S&Ps are pushed up into the top of the pre-market range and where it opened yesterday. So that's a pretty impressive gap. Just forgetting, okay, it did start from down here and went up. But looking at the day chart, which is, okay, looking at this chart and where it's going to open in the morning, it's going to open. We've got it 20 minutes or so. It's going to open up in this area here. That's an impressive gap, the gap to the top of a red bar. Now, next step in our thought process or our analysis is, what could it do from there? Well, anytime prices come up into an area of resistance, if it's really strong, it'll just go through it like it's not there. And that's, woohoo, wow, that's impressive. Hope it doesn't do that, because then you kind of have a gap and run, and those are more difficult to jump on board unless you kind of throw caution to the wind and just give it a big stop, and which is better than no stop, and then see if it makes the next run to the next resistance area. Now, a run to the next resistance area would be a decent amount for your 271. Kind of puts it right up into the trouble area right there. Right, that 50% line. Now, the other scenario would be for it to chop around. It's a sizable gap up. And the other scenario, and not more of an ideal one, would be for it to chop around over here 10 minutes, 20 minutes, 30 minutes. That would 30 minutes would be on the outside. That'd be a lot of jiggles. But anyway, the point is, let it consolidate rather than run. Be aware that if after 2 minutes or 5 minutes, it takes out that 2 or 5 minute bars high and immediately comes back in, that's going to be a wiggle or a jiggle that's going to bring in some sellers. And you've got, now, while you've got a gap, it's gapping and it's got what was resistance to be support. So what I would be looking for, if that gap reversal happen, buyers need to step up again. There has to be willing buyers that want in this market, that there's lurking demand below. Yeah, the ones that bought in early, if they, that comes back in, they may sell and they may, suffer the jiggle, so to speak. But that happens. It happens to the best of us. In any event, we are looking for what kind of jiggles might happen here at the open. And we've got a positive start. We've got this lows down here. It's gapping to the high of a red bar. It's a good start for some kind of counter trend move. Notice the moving averages are pointing down. So it's trending down here. So, we'll see. But anyway, it's building up some support, and we'll just assess it as it unfolds. Qs, same thing, actually doing a little better, up at 166. And what is this? Oh, I see, 166. So right about there, right in that line in the sand that I put at the halfway mark. And 167 isn't too far away. But that would be a little bit of a plus to get through the high of that bar there. So it's a start, still in a downtrend. You got this bottom in place, and things are looking okay as far as stabilization. Russell, this one's not so okay. This is broken down. More sellers here. These regional banks are under pressure. Good sector to stay away from. And 145, not gapping to the high of that bar. So one ETF here we probably want to keep an eye on just in case it starts to fall again. Relative weakness, it could drag others down. However, if it starts to bring up the rear here, right, that's our intermarket analysis comes into play. Whereas if this dog starts to rally, that would lead us to believe that that's a good sign for the Qs and the spiders and the Dow. So even if you're not interested in trading this, probably a good idea to keep an eye on it to see what it's doing, as well as the transports, since they're now down to this area of support, which they found some buyers at. And they're not doing too much this morning, but they are in an area of support. So we'll see if they can begin to hold here. We'll take a look at some transport stocks and see if they can begin to turn around. The Dow, same story there, gapping up into some resistance. We'll see if it can hold on to the gain. That's the focus here at the open. Can buyers hold on to this gap up, and what kind of jiggles are going to happen? Because this market is just Mr. Jiggles all over the place, down, up, down, break to a new low, back up again. So here's the futures pushing up into yesterday's topping tail. Oh boy, if this turns into a topping tail today. Well, we always open to whatever. So it's made a big move. It's opening up near some resistance. What would you do if you held this overnight? Let's forget for the moment that it's a futures contract and it's been trading here. If you had the opportunity, if you bought at the top of this high, you probably want to at least unload half, since it ran from the low up to here, and see what happened. See, does it collapse back down again? Does it go sideways? Right? That absorbing supply concept where it trades sideways through here, and that would open up the door to a push up, not to a big one, but hey, now it's getting up into that about halfway mark on the futures. So we'll see if that is what's in the cards, or sellers take control again. And if they do, won't be a good sign. Let's leave it at that. NQs pushing up into that stiff resistance area. We will see how they handle it. I suspect, just because it's basic technical analysis 101, I suspect there's sellers there. How many? We'll see. Let's see how much they can push it around. Let's see what the jiggles are here in the first 15 minutes or so. As I said, If it breaks to the upside and automatically or just immediately comes back in again, that's going to bring in some sellers. That is going to shake the confidence of longs here. Now, when that happens, who wants to step up and buy? This is what we do. This is what technical analysis is about. It's not about reading indicators. It's about reading what participants are doing with their money, watching the price action. What is the reaction to resistance? What is the reaction to a pattern that creates uncertainty? Do prices immediately drop deeply into the prior move? Or do buyers step up again and begin to, like this right over here, kind of see that topping tail? That created a lot of uncertainty, but buyers immediately stepped up. It took a couple of days and then prices pushed up before they collapsed again. So this market is one in which you have to be on your toes day to day because we don't have patterns in place here where things have tightened up, where the big moves start. When I say big moves, I mean trending moves. And what we've got here is whipsaw, uncertainty, day to day. I am ecstatic about the market. I can't get enough of it. And a day or two later, I'm scared to death. Please let me sell everything I got before I go broke. And the cycle repeats again. That's why I call it Mr. Schizophrenia. Dow, same thing, same story here. So no real changes from there. Bonds starting to pull in a little bit here. That's good. We'll see what it does as it comes down to some support area. We'll see if it holds the 200, which is in alignment with a little bit of support, or whether that starts to drop here. Oil stabilizing here. Kind of looks like a pattern that could turn higher, but it's in a downtrend. So we got to give the benefit of the doubt to the trend, but it is beginning to hold. It's more of a pattern because you don't have any big wide range bars here or a bottoming tail that blasts through the low and reverse back up or a big green bar. It's more of a pattern that suggests to me just stay away from it. And gold is holding up here. It's holding up there. So looks, I'm not really interested in gold. There's enough stocks. And as far as this whippy market, it provides day trading opportunities. Until it settles down where we can get some better swing trading opportunities, I'll pretty much stick with the day trading opportunities. And, it's my personal preference anyway. So that's it. All yours, Dan.
All right, thanks. Good morning. All right. So opens, and yeah, with this gap up today, my bias, I sent out a letter to our subscribers, is we're going to be looking to sell more put spreads. Remember yesterday, my bias on the market, I said I needed more. I didn't like this gap and crap. Greg said, which is what I was looking for also, something more, another day or two down here to give me more confidence. And today's gap up is a very good sign. I was saying that. I said, what if we gap above yesterday's high today? And, we're pretty darn close there. So it's the same drill as yesterday. We're going to be watching the first 30 minutes to see what happens here. But I like this. It's a big reverse head and shoulders on the hourly. A lot of these indexes, they're still not directional setups. It's a mess. But I'm looking to sell puts on the spiders that expire today. Today's Wednesday. We love doing that. And then Friday also. Maybe Monday also. Maybe next Wednesday also. Same with Qs. We're actually in a put spread for Friday, and I'm looking now to sell some more, maybe for Friday and next week also. So that's an open trade. Twitter, we added yesterday a put spread. Tesla, we still have open. That looks great. Might even add to that. IWM, we have a covered put, which yesterday, as an adjustment strategy, we sold an out of the money put against our short ETF. We did the same thing with LUV. We did the same thing with Urban. WPC, we're long stock. Mo, we're short stock. NNN, we are long stock. SMH is another put spread I'm looking at today. I was looking at it yesterday, remember, but I didn't like the retracement. Now it's taken out these 2 pivot highs on the 15-minute chart, so I have more confidence now. I'm going to put this in a window. It looks good. Now, hey, Larry, Fed meeting. Not that I'm aware of, but, you know, just Google it real quick. Because I think we had the Fed meetings. Oh, yeah, there is one more by the end of the year. You're right. I just Google it. I'm not sure. Journal today said, and I think that's why the markets are gapping up, playing nice, as China is, you know, said, oh, okay, I'll reduce some tariffs. And the Journal said on automobiles, they're lowering them from like 40 down to 15, something like that. So that made me pull up General Motors, and it's junk. We can find a lot better. The PLAY, look at this, 1, 2, 3, 4, 5, 6 red bars, increasing volume. And now it's gapping down huge on earnings. It's overshooting this pivot here. But if this can find buyers, this is going to be a put selling candidate because of the high volatility, the gap down, gap and snap, might even give us a day trade. AEO gapping 18 bucks. That's a nice bearish gap, and this thing has room. It has room to 16 bucks, no problem, but it's actually holding pre-market here. But I'll keep an eye on that, put them in a window as a short watch. CRM, gapping up here, 140 and change. Not a tier 1, but we'll watch that as a put selling candidate. This we found through scanning yesterday. Yep, Phil. Yep, I like it. Yeah, let's time it. We just time it with the whenever your entry, regardless of you know it not being a beautiful bear pattern, is if we're ready to sell puts on these spiders because we have a bullish intraday turn, then yeah, you can sell out of the money call spreads, $42 strike and higher, either for this Friday or next Friday. Oh shoot, I just typed VXX over here, whatever symbol I just had, darn it. I don't know what symbol I was just looking at. Hey Alex, do you remember the symbol that I said was light volume and you said, oh, 370 grand ain't light? I just typed over it by mistake, but it had a nice daily, weekly, monthly. Shoot. Shop, it's a total mess, but it's a put spread watch. Grub, hey, up $4 now. Remember I said it's not ready, but let's wait to see if there's an event. There's not great pre-market volume, but if this is up $4, then that's great. I'm going to put that in a window. PanW's was a put spread idea yesterday, and it still is. I got this dog on my short watch list. Look, daily, weekly, monthly. Yeah, if everybody, Phil and others, if you can please, on your drop-down menu. Yeah, Phil was asking about shorting call spreads on the VXX, so that's what I was answering. This is just put this in your dog category. When we say, hey, we need a let's go to our short watch list. That's one. This one, I said yesterday, if it holds 50% retracement right here, then it's kind of a 3-bar pullback into this. So set an alarm at 29.90. NVCR, that's the one Alex and I were watching yesterday. And this could be both a directional short term, 1, 2, 3 day swing, or out of the money put spread I like. Triple N, we're in. EQT was another put spread candidate. SUI, some of the, these were the REITs. They need to come in a little extended. LSI, I was watching yesterday. Urban, we're in. Look, our Urban opening flat in a strong market is good. Oh, Chud, I forgot to talk about. We're long stock. We sold a third into strength yesterday. Kim, another, this would be a nice buy setup. Another REIT, WPC, we're already in. Wow, this was this marijuana dog. 14, I think Barron said fraud, whatever. Oh, USO, we're in too, put spread. How did I miss that one? And it's perfect. It's not a directional. It will be a directional over the week's high. Today's Wednesday, so Monday's high. UNG, we're watching as a bear call spread candidate. Marijuana, Tilbury lagging. There's our Tesla. This one I'm watching. 30-minute high. I posted this as a watch in the weekend letter. A breakdown failure with a bullish island reversal. It's at resistance, so I like it just to go sideways for a few more days to build a launching pad, kind of reverse head and shoulders. So I like that. GE, we're gonna watch this dog for a while. Google is a put spread candidate, but it's hard to get a good net credit. Netflix, nah, lagging. Another marijuana lagging. Apple, nah, I'd rather just trade the ETFs, the Qs. Intel, let's see, 48.50. It's a trading range of mess. That's an iron condor candidate. Yeah, but we looked yesterday and couldn't get a good juice, net juice. NBEV. Yeah, this was a good entry yesterday over Monday's high. Little small 1, 2, 3 there, gap reversal. Microsoft, marijuana. This is a Bitcoin GTF. Facebook, still a candidate for a put spread. Cron down. IWM. Spiders right at that prior high. So the alerts I sent out, I purposely, as I do 99% of the time, give a limit. And I kind of calculated the limit where we're only going to get filled on a pullback. And that because that was my expectation with this big gap to resistance. But Q's the relative strength, which is why, Greg gave that one. And IWM's been the weakest. Here's Bitcoin. Wow, what a drop. All right, let's look at this play. Remember I said gap and snap? It's not ready. I just have it in the thumbnail. Grub. All right, see, it's not gapping up $4, so that was wrong. But still, over yesterday's high, if you can get a good credit, would be a short-term put spread candidate. Identical kind of opening plan as yesterday. I'm just watching. Let's see what happens here in the first 30 minutes. But Qs are coming in right now. All the big four indexes are coming in a little bit, which is fine. So now we just wait and see where they're going to retrace. Oh, this AEO bearish gap is reversing. That's actually a bullish sign. All right, see, well, here, I'm going to show you the trade I posted. I gave that to our advisory letter. Now, see, I set a limit of $1, and it's only 74 cents right now. So I'll leave it, keep an eye on it. When we get if we get a bullish intraday entry, I'll see what the credit is at that time, and I'll send an adjustment. All right, I like that we're going nowhere, so then we're not in a rush.